Hi, I'm Joe Wilson, a tax manager at HWB, and today I'm going to be talking to you about tax planning and interest payments made by a company. If an individual's company owe them money, then interest on the debt can be charged at a commercial rate, and this can be an effective tax planning strategy for the following reasons. The interest payments received by an individual are taxable income, but if they should fall within an individual's starting rate band, the payments will actually be taxed at 0%. At the same time, the company will also get corporation tax relief of up to 25% on the interest payments made. In addition to the individual starting rate band, they may also be able to use their nil rate band for interest income, which is £1,000 for a basic rate taxpayer and £500 for a higher rate taxpayer. So moving on, what is the starting rate band, as this does not come up frequently? The starting rate band is the first £5,000 of income an individual receives outside of their personal allowance. Crucially though, it only applies to interest income. So if an individual has a salary of 17,570, they will have no starting rate band to use against any interest income, as non-savings income such as employment and rental income is taxed before interest income is. This means that if the starting rate band is combined with the nil rate band, a basic rate taxpayer can potentially receive up to £6,000 tax-free interest in a year on interest that falls outside of their personal allowance. The saving to the company would be £1,500, that's £6,000 at 25%. It is also worth noting that unlike salary payments, interest payments are not subject to employers' or employees' national insurance contributions. If there is more than one person who the interest payments are being made to, this could create a larger corporation tax saving. If a company, say, makes an interest payment to a director with a loan account in credit, it will need to complete and file a CT61 form with HMRC. This form details the interest payments made each quarter, and the form will need to be filed with HMRC 14 days after the end of the applicable quarter end. The company making the interest payment will be required to pay 20% of the gross interest payment to HMRC through the CT61, and this is also due within 14 days as well. So, for example, if a company made a £1,000 gross interest payment to an individual, it will be required to pay £200 to HMRC. The individual will enter details of the gross payment received of £1,000 on their tax return, along with details of the £200 tax paid at source. So this would mean that if a £1,000 gross payment fully falls within an individual's their starting rate band, the £200 tax paid at source will be refundable or offset against their total tax liability.